This morning suggests the government will start to sell that stake in Lloyds once the share price hits 61 pence. We're about 10–15% away from that now. When will we get there?
Well, it's a good question. I think very much because the 40% stake is effectively held by UK taxpayers, it is going to be in the focus today and get reported in a much broader rather than just financial circles. I think we've still got some way to go. Having said that, though, when we drill down these numbers, I know it is a loss, I know it is 570 million, but the fact we're talking about millions, not billions, is a major step in the right direction as far as Lloyds is concerned. And when you drill down and you strip out those one-off costs, it is running at a 2.6 billion pound profit. The problem, of course, is that this PPI mis-selling, there is no set deadline where they can effectively draw a line in the sand and start to look forward. So trying to gauge when exactly the shareholders might expect to start to see these profits being profits rather than diminishing losses is a difficult one to say.
Is 61 pence a fair price for selling that stake?
I think when we look across at the Atlantic and see how the Fed and the US have handled many of the companies that they bailed out, I think maybe it would be better to see if we couldn't hang on a little bit longer, extend the timeline. I know politicians have a pretty short-sighted view on these sort of things, and undoubtedly sort of 2015 looms large in their minds when there's potential for the next general election. But I think if it were to be given a bit more time, there could be a decent profit to be had rather than just covering costs.
Well, Lloyds shares opening down 1.7, almost 2%, so we're moving further away from that 61 pence. Just want to finish up, Alistair, on the sequester in the States. It seems to be building up, dragging on, and this is a big risk, this is a big headwind for markets, isn't it?
Well, look, the fiscal cliff went right down to the wire in December, and I think markets would have been surprised if this sequester didn't go right down to the wire as well. We're talking about $85 billion worth of cuts to be implemented over the next 7 months. But behind that, there's also another $109 billion over the next 8 years that would come into play. I mean, when we look at the US and the implications that would have, they would obviously see a sizable chunk of that, almost half of it would be from their defense budget, but also being affected would be health, education, housing subsidies and unemployment benefits as well. And that reduction in cash into the market would effectively see the best part of about 0.5% cut from their projected 2% growth forecast for the US. So that's a pretty important figure there. I think we'll see something thrashed out in the dying minutes, no doubt. But once again, they'll take it right down to the wire.